Welcome back to the Daily Crypto Roundup. Today's session is an important one because the market has continued to build on momentum rather than fading it. And that tells us a lot about what's happening underneath the surface right now. We're seeing confidence return quickly, sentiment flip faster than most people expected, and some very clear signals about where capital is moving, not just into Bitcoin, but across the wider market. We're going to walk through where the top coins are trading right now, why Bitcoin is hovering just below a major psychological level, what's driving renewed risk appetite in altcoins, and why some of the biggest stories today have nothing to do with hype and everything to do with positioning, flows, and confidence. We'll also touch on a massive whale trade that's caught the market's attention, a regulatory setback in the US that surprisingly didn't spook prices, fresh institutional developments overseas, and an unexpected geopolitical twist that analysts are now factoring into the broader crypto picture. Before we get into the numbers, just a quick word on the community. It's been genuinely good to see the level of interaction picking up again. New listeners joining in, regulars sharing thoughtful takes, and proper discussion happening in the comments. That's exactly what we're trying to build here. And as always, a reminder that we are still running the XRP giveaway. So if you want to be in with a chance, make sure you're commenting on the episode. All right, let's ground ourselves in where the market actually is right now. As of today, total crypto market capitalization is sitting at roughly $3.28 trillion, up just over 1% on the day. That might not sound dramatic, but it matters because sentiment has shifted quickly alongside it. The crypto fear and greed index has now moved into greed territory, its first greedy reading since October. That tells us optimism has returned faster than expected, and whenever that happens, it's worth paying attention to why. Starting with the top 10 coins, excluding stablecoins. Bitcoin is trading around $96,700, up close to 2% on the day, after briefly pushing toward $97,000 earlier in the session. Ethereum is holding above $3,300, consolidating after a strong breakout that saw it gain roughly 5% during the latest move higher. XRP is trading near $2.10, slightly softer on the day, while Binance Coin is hovering around $940, marginally higher. Solana is trading close to $140, steady, but not leading today's move. Dogecoin has cooled slightly, trading near 14 cents, while Cardano is sitting around 41 cents, mixed but stable. The key takeaway from the top 10 today isn't explosive upside, it's selectivity. Capital is rotating rather than rushing blindly into everything at once, and that's usually a healthier sign than indiscriminate buying. So why is Bitcoin holding up so well right now? The biggest driver over the last 24 hours has been fresh spot ETF demand. Over the past few sessions, US Bitcoin ETFs have pulled in roughly $1.7 billion in net inflows, with today alone accounting for over $840 million. That's one of the strongest inflow days we've seen this year, and it's important because this is not fast money. ETF inflows represent capital that is being deployed deliberately, often as part of longer-term portfolio allocations. And we're seeing that demand concentrate heavily in the largest products, particularly BlackRock's Bitcoin ETF, which absorbed the majority of today's inflows. That demand has helped Bitcoin rebound sharply from the lows seen earlier in the month, when price briefly dipped into the high $80,000 range. Since reclaiming the $91,000 to $92,000 zone, Bitcoin has moved steadily higher, and today's action shows that buyers are still willing to step in even as price approaches resistance. But ETF flows alone don't explain the speed of the move. Another major factor today was a short squeeze that unfolded once Bitcoin decisively cleared the $94,500 level. That price had acted as resistance for a while, and once it gave way, a wave of leveraged short positions were forced to close. In total, roughly $700 million in short positions were liquidated across the market in a relatively short period of time, with Bitcoin and Ethereum accounting for the majority. What's important here is how this played out. As Bitcoin rose, futures open interest actually declined. That tells us this move wasn't driven by traders piling on leverage. It was driven by shorts being flushed out and real buyers stepping in. Analysts have pointed out that this kind of price action is generally healthier than rallies built on increasing leverage, because it resets positioning instead of overloading the market with risk. Ethereum benefited from the same dynamic, pushing above $3,300 for the first time this year. The move wasn't parabolic, but it was decisive, and it reinforces the idea that Ethereum's strength is starting to reassert itself alongside Bitcoin. Once Bitcoin cleared resistance, something else happened. And this is where the market gets interesting. We saw sharp, double-digit gains in several names that had been lagging for months. Dash surged more than 20%, reaching its highest level since 2021. Optimism jumped close to 20%, while Celestia and Pudgy Penguins both posted gains of around 14%. These aren't random moves. They're classic signs of traders increasing risk exposure once confidence returns to the market. Bitcoin dominance slipped slightly as this happened, falling to around 58.6%, which tells us capital is spreading out rather than hiding exclusively in the largest asset. This doesn't mean we're suddenly in full altcoin season, but it does suggest that risk appetite is waking up again. And that usually only happens when participants feel more comfortable with Bitcoin's position. Now, one of the most talked about developments today was a massive whale trade that caught the market's attention. An anonymous trader opened approximately $850 million worth of leveraged long positions across Bitcoin, Ethereum, and Solana. The largest portion of that exposure was concentrated in Ethereum, with significant leverage involved, while Bitcoin and Solana also saw substantial positions opened. This trader has a reputation for being early to major moves, which is why the market reacted so strongly when the positions were revealed. For many, it was seen as a strong vote of confidence, a signal that someone with deep pockets believes there's more upside ahead. At the same time, it's a double-edged sword. Large leveraged positions add fuel on the way up, but they also introduce fragility. If the market turns sharply, those positions could unwind quickly and amplify volatility. So while this trade has boosted bullish sentiment, it's also something traders are watching closely for clues about potential turning points. Interestingly, despite all this momentum, one piece of news that might normally have spooked the market barely registered. In the US, a major crypto market structure bill hit a roadblock after Coinbase's CEO publicly withdrew support for the draft legislation. As a result, the Senate Banking Committee postponed a planned markup session, effectively delaying progress on the bill. The reasons for Coinbase's pushback are important. The company argued that the bill, as written, would undermine innovation, restrict tokenized equities, weaken the CFTC's role, and potentially eliminate rewards on stablecoins. In short, Coinbase's position was that a bad bill is worse than no bill at all. What's notable is that the market largely ignored this. Bitcoin didn't sell off, Ethereum didn't flinch. That suggests traders are increasingly comfortable with regulatory uncertainty, or at least confident that regulation is no longer the dominant force driving price in the short term. Outside the US, institutional adoption continued quietly. Bitwise launched 7 new crypto exchange-traded products in Europe, expanding access for investors through traditional markets. At the same time, JP Morgan published data showing that crypto fund inflows hit a record $130 billion in 2025, with expectations that institutional demand will accelerate further in 2026. That's a powerful backdrop. Regardless of short-term volatility, big money continues to build exposure to the asset class. On the analyst side, sentiment is increasingly constructive. Several market commentators have pointed to improving macro conditions, easing inflation pressures, strong equity markets, and lower energy prices, as factors that support risk assets like crypto. Arthur Hayes weighed in with a particularly bullish take, arguing that if global liquidity conditions loosen this year, Bitcoin could make new all-time highs. His view is that Bitcoin's struggles last year were tied to tight monetary conditions, and that a shift toward easier policy would disproportionately benefit crypto. Not everyone agrees on timing, and some analysts still warn of potential pullbacks if sentiment runs too hot too quickly. But the tone has clearly shifted from defensive to opportunistic. Finally, one of the more unexpected stories today came from geopolitics. When U.S. forces captured Venezuela's former leader Nicolás Maduro, it had significant implications for global energy markets. Analysts noted that if Venezuela's oil sector eventually reopens under a new regime, It could lead to increased global oil supply and lower energy prices over the long term. Energy costs are a major factor for Bitcoin mining. Cheaper energy could improve mining economics and support network growth over time. While this is not a short-term catalyst, and any changes would take years, not months, it's a reminder that crypto doesn't exist in isolation. Global politics, energy markets, and monetary policy all feed into the ecosystem. So where does that leave us today? Bitcoin is holding strong just below a major psychological level, supported by real inflows and cleaner market structure. Ethereum has reasserted itself above key resistance. Altcoins are showing early signs of life as risk appetite returns. Institutional interest remains strong. Regulation remains messy, but less market-moving, and sentiment has flipped quickly from caution to confidence. That doesn't mean volatility disappears, but it does mean the foundation under this move looks firmer than many expected just a few days ago. As always, keep your eye on levels, flows, and sentiment, not just headlines. If you found this useful, make sure you drop a comment to be in with a chance of the XRP giveaway, and let us know what you're watching right now. Thanks for listening. And as always, we will see you at the top.